drastically down.
Yeah,
Absolutely.
feels good. It's
For
amazing
some,
how much
wine
healthier
and
one
beer
can be.
consumption has gone up.
Sorry?
Sorry, Pankaj?
For some, wine and beer consumption has gone up.
Oh, yeah. The stock
In
is
fact,
Yeah.
surprisingly, I have felt that I have got a bit fitter than usual, because I'm not going out all those social
Gatherings,
meetings
yeah.
and wines and beers quite often. So I mean, a lot of people I know. In fact, Just is looking quite sharp now. Since we have last met. So, and HS of course is always
It's been
he's up there.
Vikas, that's a very unfair comment because Justice always look very sharp every time I see him. Even in his kids and my kids go to the same early learning school, and
Oh,
Just
that's
always
great.
look sharp. Yeah.
No,
I
he's
used to
always
feel undressed when I used to go and see him.
all that
he's
inspiration to me.
he's one gentleman here. So
That's
I'm
for
sure everybody is. So
And by the way, he's been walking like 30,000 steps a day, which all of us are not finding it hard.
seriously, I mean, HS.
Despite work from home.
I work out in the morning. I have been fortunate enough that I have a complete gym in my house. But man, just what are you doing? I mean, 30,000 steps still. I mean, I cannot do it if I do 3 times. I work out 3 times a day. I cannot do that. So I don't know. I mean, hats off to you.
I take the liberty to go down in the complex when people are not there during afternoon, late in the evening, and then it is just about a little jog and walk, nothing else.
Makes sense.
So
Or either you have got
30,000,
that equipment that those automobile car sellers, they have to turn around the meters up and down. Maybe you have something some gadget like that. Anyways, jokes apart.
Yeah.
Wonderful. So we can start now. Karan, over to you.
Thank you. A very good afternoon, everyone. Thank you for joining us today for the webinar on the topic of real estate investment sales horizon in short to mid-term. I welcome you all here with the industry experts who will share their thoughts on the future of real estate amid this pandemic. I would like to take this opportunity to quickly introduce the organizers of the webinar. Realistic Realtors Incorporated in 1998 is one of the fastest real estate consultancy firms in the country. Our presence and serviceability in 400 plus cities makes us the largest Indian consulting firm with more than 200 professionals on board. Our vision is to deliver quality services to our customers. Allow me to introduce myself first. I am Karan Malik, serving as the head investments in the organization. It's been a pleasure to be associated with RR for about a decade now, which has given me immense learning and growth. My co-host this afternoon is a very dynamic personality who would also be the moderator for the webinar, the Group Director of Realistic Realtors, Mr. Jas Simran Singh. Jas has a total working experience of more than 20 years, out of which he was in HDFC Bank for 10 years, handling stock markets and real estate division, post which he joined RR and has been associated with us for 10 years now. He would be facilitating the question and answers for today with all the esteemed panelists. We also have some very prominent speakers, intellectuals, and industry experts who would be sharing their thoughts about this topic. Please welcome our first panelist, Mr. Yash Gupta. Yash is the managing partner of YGR, which he founded in 2018. It is a real estate investment, development, technology, and advisory platform. Most recently, Yash set up and led Hines India as its senior managing director and country head. Under his leadership, Hines India Investment managed over $500 million and also developed One Horizon Center Gurgaon, which was amongst the best commercial developments in India and Asia. Welcome, Yash.
Thank you.
Our second panelist this afternoon is Mr. Pankaj Pal. He is one of the veterans of the industry with 25 plus years of experience in the real estate sector. He has played key roles in making strategies and boosting sales for developers like Vatica, Ireo, M3M, and Eros. Currently, he has been associated with AIPL for the past 5 years as President Business Development and Corporate Strategy. Welcome, Pankaj.
Thank you. Hi.
Our third panelist is Mr. Harinder Singh Hora, the Managing Director of Reach Group. He laid the foundation of this venture, which is a prominent real estate development company. In a very short span of time, by achieving collaboration with large institutional fund and strategic partners, the company has successfully accomplished boutique and valuable projects spread over 2 million square feet of terrestrial space. His pioneering projects include Commercial Corporate Tower, Reach Commercia, Retail Space, Reach Arya, High Street Retail Complex, Reach Three Roads, and Corporate Architecture, My Tower. Welcome, sir. Mr. Vikas Kohli. Vikas has a total experience of more than 20 years in various industries. He started his career in the manufacturing sector in the year 2000, post which he got involved in other sectors like fashion, hospitality, retail, and real estate. He is currently the managing director of Eon Sports Private Limited, 18 Select by Virat Kohli. Also, he is one of the directors in Passion Hospitality, which owns the brand like Nuba and Dhansu Cafe. Welcome, Vikas.
Hi all.
Our fifth panelist is Mr. Rajesh Relan. He has 30 years of experience in financial services sector and last 20 years as senior leader in insurance within India and in Asia Pacific region. He was the managing director of PNB MetLife India from 2006 till 2014. He currently serves and advises boards, private equities, and corporates. Hi, Rajesh.
Everyone.
Mr. Sunil Tyagi, the co-founder and senior partner of Zeus Law. He is a practicing lawyer since 1991 and is heading the real estate and infrastructure division in the company. He has been very instrumental in structuring various transactions ranging from development of townships, commercial, residential, and institutional complexes in various parts of India. We welcome you, sir.
Thank you, Karan.
Looking for a great interactive session. So before we start the questions with the panelists, I would like to give a brief overview of the current situation. Indian real estate, prior to COVID-19 outbreak, was just beginning to come to terms with the multiple reforms and changes brought in by demonetization, RERA, GST, and subvention ban. These measures helped fortify the sector and instill transparency. While the sector was projected to be $180 billion by 2020 and $650 billion by 2025, these numbers post-COVID are likely to see a decline. According to reports, there were 78,000 unsold ready-to-move-in flats in the end of March quarter across 7 top cities of India. NCR being at number 3 on the list with 15,600 unsold apartments. In total, these units are worth approximately 66,000 crores. In this situation, it is likely that residential segment would remain an end users market. On a midterm, we foresee that NRIs would be interested to purchase such assets in India due to potential price correction and dollar depreciation. The impact of change in investment climate was reflected in the asset allocation, as investors parked more funds in more secure and stable office spaces. Investments in the office sector rose to $2.9 billion during the year 2019-20 from $1.8 billion a year ago. Factors such as availability of A-grade commercial space, fairly reasonable rental, coupled with lower vacancy levels have led the commercial segment to emerge as the investor's favorite asset class in recent times. This year too, we feel that commercial yielding assets with stable tenants would see a good demand as investors will look into safer sources of income. Now, talking about the institutional investments, during the period 2010-2018, the Indian real estate industry observed a total institutional investment of $38 billion spread across 760 deals. Nearly 68% of these deals happened post-2015. Mumbai-based companies garnered the most investments in terms of both size and number. It attracted investments worth $10 billion, followed by Bangalore and Gurgaon with $6 billion and $3.6 billion respectively. This year too, we feel that FDIs would be eyeing on stressed assets considering weak economic conditions. Now, talking a little about the office absorption. Office absorption might as well see a dip from 43 million square feet, which was the earlier projection for this financial year, to about 34 to 35 million square feet. Whereas Developed areas would be landlord favorable due to less supply of A-grade infrastructure. On a midterm, we feel that office space would be the first one to recover, as work from home culture cannot be a permanent solution adopted by corporates. Well, this is it from my side. I would request just to take over and seek comments from the experts.
Thank you, Karan, my co-host for the webinar today, and my partner from last almost a decade now. It's been 10 years. So thank you so much for the wonderful introduction of our panelists and giving us an overview of the real estate investment market. A very heartfelt welcome to all our esteemed panelists. Thanks for taking out your valuable time for sharing your thoughts with us and our viewers. We welcome all our attendees and listeners for joining us today. We'll try and give you an overview on the real estate sales horizon in short to mid-term, how the markets are expected to function post this situation of COVID-19. We are sure that our panelists, who are the top leaders in their domain and have collective experience of more than 180 years put together, would do their best to solve the queries and doubts of our listeners. It's time that we all are learning out of each other, as no one has ever seen such a situation before. But with their varied experience, we'll try to come out with a much better solution. We are in lockdown situation since more than 40 days today, and it has changed the way we used to think about our life, about work. It's now time to refresh our ideas and start seeing how to get back to work and come into a normal routine life. So now to start with, I'll quickly go to Yash to answer our first question. So Yash, what are your views about investments in real estate sector from the macro level? You know, top funds have been raising they have already raised about $10 to $11 billion for picking up stressed assets across Europe. What's your view on such investments by these funds in India during such times? Over to you, Yash.
Thank you, Jess, and thank you, RR, for the invitation and for putting such a great webinar together. Pleasure to be here. I will break your question just in 2 points. One is, what is the macro for real estate going to look like? And second is, what will the investor sentiment then kind of play out with this macro view? On the macro for real estate, there is a logical argument which basically says that one, India is a growth story. I think the Indian growth story is intact. It will continue to be intact. It may get slower, but it will continue to move well because we are largely driven by domestic consumption, which we think again could slow down but would not evaporate, and therefore that story stays intact. The second is, people are very concerned in general around real estate because the demand may go down, especially if GDP goes down, if there's more unemployment, etc., and some of the shocks that will happen to the economy as a view of that. However, the reality is we think the supply will go down much more than the demand will go down. There is a lot of stress in the real estate industry. People are facing problems. I don't think as many new projects will be announced. And therefore, though the demand goes down, my prognosis is supply will go down larger or more than demand will go down. The third thing that will happen is, I think there'll be a flight to safety. And we've seen this in other shakeups as well. We've all seen what's happened to the public equity market. Just you yourself have a background in that. The public equity markets have been especially volatile. They're being artificially propped up by all the stimulus that different governments are putting in. And we think the earnings will not really power up as to where they should be and what the stock market reflects. So everyone's talking about a W recovery, not a V recovery. So as stock markets continue to be volatile, people will go more and more towards real estate. So fundamentally, I think the Indian macro story is good. The demand will go down, but supply will go down more. And the third thing, that there will be a flight to safety, to the downside protection that the real estate provides. That said, and all of this should translate into better deals, I think emotionally 2 things will happen now on the investor side. On the institutional investor side, the institutional investors who are raising a lot of capital, as you correctly said, both in Europe as well as the US, and have also a lot of capital. I think I heard the number that there's 1.9 trillion of dry powder available with private equity players today. That said, I think they will first go to safer shores, which is developed markets like the US and Europe, before they come to emerging markets like us. So institutional investors will have to wait and watch what their view is for emerging markets, There is one silver lining, however, that because of the very strong kind of stimulus that the American government and now Europe is also doing in those home economies, the deals that they're hoping, that their bargain deals that they're hoping they'll get, they may not find them. So they might come back to emerging markets faster than we expect. Otherwise, it could be another 18 months or 24 months before we find institutional investors in India. The domestic investors, however, I hope should step up. I think rationally it makes a very strong sentiment or case for them to get into real estate today, though emotionally they'll be a lot more cautious. And they may also have some liquidity concerns because money might be stuck up in either current real estate or current stock market issues. And my guidance to them would be that this is the time to be opportunistic, not thematic. So don't say, I want to invest in retail. Don't think I should be investing in office. You should be investing in good opportunities. There will be value for money deals. Go after the right product, go after the right asset, go after the right location, and you will find good deals to happen. And the next 18 to 24 months will be the best time for them to pick these up.
Wonderful. I think that's a fantastic perspective, Instead of going for a retail or office, go for an opportunity, because, you need to get returns out of it. And if you've got a good opportunity, then you've made it, you've killed it. So
I think the deals will get better, Jas. Yes, because I think the developers and the real estate industry is under stress. Assets that we never thought would come to market will come to market. Opportunities will come to market, whether that's residential inventory, whether that's commercial inventory, whether that's retail inventory. And I think if investors guided by people like you are smart about it, there will be some very, very good opportunities to go. So go for value for money. Again, I would say don't go for the cheapest thing you can find, but go for something that is really good value for money. And you will find that in the next 18 to 24 months.
Wonderful. That's a very good perspective coming out from you. And we are also gearing up for that, in fact. So thank you so much. And just quickly coming to you again on another aspect, what we have is that what do you see as opportunities for REITs in India? Post the success of Embassy REITs, and there are one or two more in the pipeline. So what are your expectations from the Indian developers, or how do you see REITs in the future market?
Sure. Very, very happy to see what happened to the Embassy REIT. I mean, it's been a great success story. Jitu is a personal friend. In fact, a small factoid is that I introduced Jitu to Blackstone when Blackstone came to India in 2004. And it's such a great story to see how it's played out over the 20 years or so, or almost 20 years. I think REITs are a great example. And as I talked about how real estate, where people will be investing more in real estate, in my opinion, because there'll be flight to safety that a real estate asset provides, I also think there'll be flight to quality. So not only will people want to get the safety of a real estate, they'll also go for the safety of a good manager. And REITs offer you the opportunity to buy into income streams which are professionally managed. Tenants, as we said, demand will come down. If demand comes down, the tenants who are there will become much more choosy about both the building or the retail format that they occupy and who is managing that. They will be spoiled for choice. Combine that with some of the issues which are going to come out of this COVID crisis, people will get a lot more focused on wellness, on health. They will want to know, is this building well maintained? Is the HVAC system properly done? Is there right security? Is there right disinfectant? Is it cleaned properly, etc., etc.? So buildings that are run by good managers and professional managers will be demanded by tenants. Buildings which are sold with multiple owners, no one really is taking no one's really taking the ownership to really run the building or thinks that it is their assets to manage. I think those buildings will find tenants leaving and relocating. So REITs is a great way to get into a professionally managed portfolio. There will be other ways to do that, of course, as well. The only thing that one has to watch out on the case of REITs is that a lot of the assets that are owned by REITs are occupied by technology and IT tenants. And if IT is going to, if TCS really is going to do what TCS is saying, which is it's going to promote work from home in a very big way, what you have to be careful about is looking at the portfolio of the REITs that you're going with and the tenancy behind. I think the MSME tenant is going to be a lot more robust in the future. The IT tenancy could get, we will have to wait and see how the IT tenancy plays out. And you should just be carefully watching that before you get into a REIT. But it's a good format.
Wonderful. No, that's a great insight, Yash. It's going to be a big change in times to come. And I agree with you, for tenants, if If the opportunity is which is there, which is less, and the tenancy is less, so they will obviously go to the best and the professionally managed. So that's a great insight. Wonderful. Thank you so much. So moving forward from macro levels to the micro levels, my next question comes to Pankaj. So Pankaj, as Gurgaon market sets the tone for other markets and decide the trends, please share your views with us with respect to the office and retail sales post-COVID. What do you think? With the ongoing construction and so much of supply coming up, where do you see the markets going forward from now? Over to you.
In the thick of things, just and let me tell you that this particular segment of real estate, which is commercial, retail, and office sales, this particular segment has been rocking, and it is every investor's favorite go-to place now for making investment. But then came this big pause, and now this pause came with the fear psychosis. Everybody's talking about when will this thing be over, when will things normalize, and when they normalize, is it going to be new normal? Are we going to go back to our old normal? And what's this new normal going to be? So everybody is like pretty confused. But I have a point to make. I think that the fundamental equation which governs this particular segment of real estate, which is demand, supply, and affordability, this fundamental equation has not altered. This stoppage and this in transactions happening these days is not because of alteration in this fundamental equation. It's come because of this other factor, the COVID factor, which has created this fear psychosis. So I believe when this factor gets taken away, the earlier equation is going to resume its functioning. Right now it's difficult, human memory is pretty short. We take cues from what is happening in our surroundings. Right now it is very, very difficult for us to conceive how we going to think normally. But we will, let me tell you, as the lockdown opens, we're going to take cues from what we see around us. And because this small part of 40 days or 60 days, this very small fraction of the human history. So it's not going to overcome the human spirit of enterprise and Josh. Things are going to get back to normal. So that's one aspect. But let me tell you this, when I said things were rocking, and when things rock, lot of excesses happen. People because when things rock, there's a momentum, and then everybody, all players in this equation start chasing the momentum. Investors they don't want to miss the momentum. So they close their eyes and they just chase propositions which come their way. Developers, they want to make the best out of the situation. So they will launch projects wherever they can. Not because they're not worried about whether making an office or retail complex in this particular location or micro market actually makes sense. And why should they? Because investors are anyway buying. And then focus starts shifting gradually from the fundamentals. When I make a real estate investment, and any investor does, it's a pretty hefty amount for an HNI or a middle class investor. When there's euphoria, focus shifts from the fundamentals, and people start focusing on the extras, the frills. That's why the real estate is a cyclical business. While the going is good, excesses happen from the demand side and from the lack of caution side, and the cycle changes. So this pause is a very good opportunity for the market players, whether it is the brokerage houses or the investors, and how the brokerage houses advise the investors, and for real estate developers also when they acquire land, to take a pause and try to analyze whether any project that they're launching and any projects the investors are buying, any project the broker community is recommending is grounded on fundamentals, which is when the complex get eventually built, what is the actual demand for that project, whether it's an office project or a retail project. Fortunately, in commercial, unlike in retail, we've got a very clear-cut formula to determine the capital value, which is the rental yield. Office, it is a fixed rental. In retail today, it is a mix of minimum guarantee and assured return.
Yeah.
So you've got a pretty simple tool to analyze whether the pricing is right and whether I'm buying something which is going to have takers or whether it's something which is very futuristic and the developer is just trying to make the proposition attractive by offering discounts and freebies. Because beware that there's nothing, when you buy real estate, there's nothing like a discount or freebies. It comes out of your own pocket. So I would say there's no need to panic because of this pause. The fundamental equation hasn't changed. Things will be back to normal, but utilize this pause to analyze if we were going wrong. So you parting with a whole lot of money as an investor to buy a commercial real estate. Make sure that you don't need to be expert to figure out whether the proposition is rightly priced or not. When you buy office space, you can look around and analyze what existing buildings are commanding. When you buy a retail space, it's fairly easy to analyze what the residential catchment is. So don't just chase the momentum, utilize this pause. So the short-term aspect of it, there is a medium-term and long-term aspect of it also. China is the villain of the piece because of geopolitical reasons of the Western countries. They have their geopolitical reasons now. Because corporates now, they want to spread their risk. They don't want to put all eggs in China's basket because they know that America somehow has recognized China as a geopolitical threat. So they want to move their assets out of China. And China's got some fundamental flaws. They're not democratic. The judicial system is skewed in favor of their own corporates, and intellectual property rights are a problem. So from the medium term and long term, for India, this opportunity, because a lot of business is going to shift from China to India, manufacturing, which will require offices and also infrastructure in terms of retail. So this is an opportunity shaping up, which is a big plus for commercial retail. And
wonderful. So what we can gather from your discussion is that, as an investor also now you need to be smart enough to know where you're putting your money, and the channel partners who are associated with the developers also need to guide, which they always do, and evaluate which is the right product to put the money in rather than the freebies being offered or otherwise. The past record of the developer is a must. Plus the quality of construction, what we are putting your money into, is also very, very important. Thank you.
And the location, ultimately the location.
And the ultimate location. Wonderful. Thank you so much, Pankaj, for your inputs, for your insight. So now moving ahead and taking this topic with Harinder. So Harinder, there was a question which, we were just talking amongst certain group of people that, certain industries like pharma, like e-commerce, FMCG, etc., which will see a significant growth during this COVID time. So as a developer, what will be your advice to those companies? Companies means those organizations, their employees and associates for future investments. What do you think? Over to you.
Thank you, Jess. Thank you for asking this. I mean, a very valid and a very good question. I think I will club them into one basket, that for me, they are a consumer of real estate or an investor of real estate, whether it is an employer or an employer. And my message to them, with vast experience and what I've seen in past times, especially for the, the consumer of homes first, and then we'll come to the other aspects of it quickly, that we all have realized over last 6 or 8 weeks of discussion with various experts that customer or consumer is a king, and another king, especially during COVID time, is a cash. So customer who has a cash is a big king. Now, if you're a big king, you will act generous towards your kingdom. Right now, as a customer, first time or after long, you have an opportunity to contribute back to your kingdom, which is like you are responsible for accelerating your economy. Now, all you have to do is, and I'll pick up from my expert panelist 2 words, opportunity and, fear psychosis. If you can understand right now, the opportunity is the best. It's not that you're acting generous, but you will also be benefited big time if you react and act and understand what's going on. So for me right now, if I have to, put real estate into 4 big aspects or real estate development, there is a government, then there is a funding partner, which is banking partner, landowners and developers. Now all 4 four of them are talking so much cohesively. They're all aligned, and first time they've come together over last 6 to 8 weeks, and they're all understanding the need of finding solution to accelerate the demand. What will end up happening is all the stakeholders together, when they talk and understand other person's situation, they will end up creating an environment or an ecosystem for consumer, which is a king, to come back and buy. In past also, in last few years, whether it is RERA or bunch of other initiatives or regulatory frameworks, they have been created to make sure that the customer is protected. One, you are protected pre-COVID environment. Two, this has created an opportunity where all stakeholders are working seriously, honestly, to give you back opportunity to buy. And my guess over last discussions, and I'm really sure that this is the way we have to go forward eventually, because everybody is talking the plan, but I'm just going to talk that all the four stakeholders right now have a big responsibility. I'm again repeating, a big responsibility. All government, banking partners, funding partners, developers, landowners, they all have to contribute. They have to come out with a concession or a formula by which consumer can come back, because he's the only one who can accelerate and bring back the cash. Now, there are some industries where people are secured by their jobs because those industries are doing well. There are people who were sitting on the cash and they were waiting to buy real estate. They had enough savings, but they were not getting the confidence on the pricing. If we can give our consumer a confidence that the value is right, there are concessions from government, which could be in form of stamp duty correction. There are tax exemptions which government should announce. So government has their role to play. They could give benefits to developer in terms of approval cost reduction. If that happens, and also if the developer can create a product which is 10 to 15% kind of cost optimized, at the same time taking care of the environment and sustainability and other factors, so that it's attractive enough for home buyer to kind of come and buy a new design or a new product. If we can give them a benefit of price, if the government can add to that by giving free buys, I personally believe, and if banks can give a rate of interest of say sub 6%, which might happen because there is enough liquidity for banking system to come back and kind of promote the demand for home buyers. All put together, what will happen is customer will be able to buy a product worth 100 at about 80-85% value. Now, if that happens, if the customer has to make up mind, most of these customers are either living in rented homes where they are ending up paying for a 1 crore house, they pay 25,000-30,000 rental, which is like 3% return or rental they are paying. If they are getting home loans at 6%, exemption of bank can move from 2.5-3 lakh to say 5 or 6 lakh. The cost of their home loan leverage will come down to 4.5%. And they have some of their own cash. They will end up buying the home for free. It is like you're buying home for free, because if you keep yourself in a rented house for 8 to 9 years, you would end up paying a rent and not owning the home. Whereas you're buying today a property worth 1 crore at 85 lakh with so many exemptions and concessions given to you. So you are a real king right now. Act like one, come back faster. Don't wait for more correction. This window will be only given to you for 2 to 3 quarters or maybe less. So you got to just act. If I would be a consumer, I would already be going online, not waiting for the actual site visit and selecting which location, which product I want to buy. And I'm sure this is happening. I'm very optimistic, and I'm sure the customers are listening and they're gearing up to utilize this time to buy your own dream home. And same goes for the corporates. Probably, they got to take positions and they got to start investing into real estate versus renting, because they're the investment. I mean, they're the opportunity is even bigger, because you end up giving 8 to 9% as a rental yield to an investor by renting a property. If you can now start buying a property, maybe in lesser time you recover your investment. You will also get leverage. And in the industries where people are doing already well, they will have all the reasons to replan their cash flow and take positions on real estate. Because real estate is not something, especially in a country like India, where our population is like the 17% of the world population and our land size is 4%. And that too, due to infra not developed to every corner, there is few land or few opportunities in tier 1 and few cities where you have developed real estate. So I believe that corporate should also come forward and start taking a decision of how they can re-strategize their planning to buy offices and commercial real estate. And I believe that will happen, because in most of the past recession, that did happen. Now I think it will happen more. So over to you, Jas.
Wonderful. So I would say that's a totally different perspective and a very, very valid guidance to all those people who are at senior levels, good levels in companies of pharma or e-commerce. So this is, I think, the best time for them to own a house. And if the government supports with the interest rates, which is going to happen because they'll come down. So I think, this is the time to make your own home and shift from rented to your own accommodation. So in that sense, do we see, Harinder, you coming into residential also now from retail and commercial developments?
Well, I'm sure. I mean, if I'm saying this, I'm already trying to work on, a product which definitely is the need of hour. And I will definitely try give my customers what I'm teaching or what I'm preaching. I got to practice that. So I'm definitely looking at that opportunity. But as I said, I'm just one poor part of this whole story, which we are the face of the development world, but we are supported by government, the bank and funding partners, and the landowners. If they all three equally support us, we will definitely give customer what it needs, and economy is definitely wanting all of us to act and react fast.
Wonderful. Surely. So looking forward that everything gets, on the same page and we can do something there. Thank you so much, Harinder, for sharing your perspective. So now moving on to Rajesh. Rajesh, you have been investing in real estate from a very long time now. It's been about 30 years. You've been into the corporate sector. How do you see commercial office space market post-COVID from an investor's lens? We would, we would like to share. We would want you to share your views, please.
Sure. Let me first start by saying that COVID has surprised all of us.
Yeah.
Initially, everyone was in a phase, what we call as normalcy bias, and we felt that nothing is going to go wrong with the real estate market. Everything will come back. Then it was second phase, and we realized that COVID was happening all around, and we got into a stage of acceptance. And when we knew that, yes, it is going to impact real estate, and particularly commercial real estate. And now we're in the third phase, and the question that we are facing currently, questions that we are currently facing are, how do we deal with this and what do we do about it? And that brings us to the question, what are the investment considerations for a retail investor with regard to commercial real estate? And this is the third stage that really brings in the element of uncertainty. And in times of uncertainty, particularly in corporates, long-term planning stops. Focus is on survival, focus is on sustenance. Conservation of resources comes into play, and focus is on expense optimization, and sometimes expansion takes a backseat. Having said that, looking forward, I see a substitution effect, substitution from high rental occupancy to low rental properties, move from high street to inside the locality. I see it from more city business center to a developing center on the periphery. I see opportunistic negotiations. Smart, strong companies will start negotiating longer lock-ins at low rates. This is what Harinder was just alluding to. This is an opportunity. And not so strong companies could prefer flexible occupancy with short or actually no lock-ins at all. So the whole co-working model could be seeing some kind of a change in there. And this could also lead to some kind of mismatch in buyer-seller expectations, because no one's going to sell cheap and no one is going to buy at the pre-COVID rates. So obviously there are going to be fewer trades as well as what you're going to see. And finally, in the immediate short term, what I really see is that I see a status quo. I see a wait and watch type of a situation for deployment of capital. From an investor's perspective, since you asked me as an investor's perspective, yeah, I would want to stay there for some time and see and watch as to what is happening. But this could actually change very, very fast over the medium term, and depending upon demand and supply of commercial micro markets, as Pankaj was alluding to. Confidence will return, but how long or short is the cycle is hard for anyone to predict. And ultimately, it's the risk-reward trade-off or a decision that Harinder was talking about. And those with deep pockets and willing to invest could certainly benefit.
Sure, perfect. So basically, what you're saying is that if high rental tenants shift to emerging locations or the developing locations, it will benefit all and will help in some kind of a faster recovery. And as an investor, you would like to, wait and watch for some time before putting your money in.
Absolutely. If you look at the whole startup system, yeah, I think that could be impacted. There are startups which are without revenue. Then there are startups who are with revenue. And some of those startups who are with revenue could slip back into a situation when there is no revenue. So when that kind of a situation happens, you will find that they would need funding requirements. And if that funding requirement doesn't come in, what happens to those kind of entire ecosystem that we developed over the last few years? So we will see a bit of changes, and we will see those. And as an investor, I would want to watch it for some time before I really jump into it. But yes, at the same time, like Harinder was saying, if I find something which was at 10,000 rupees a square feet and is coming my way at 7,500 square feet or 8,000 rupees, probably I'll look at it, because I will look at it, and because I know I've got to wait for 1 or 2 years into it, and I'll build my cost of returns into it, and I'll wait for it. So it's all about opportunistic deals. It's about location. It's about buildings, as what Yesh said, which have got all the facilities and that would be taken up first.
Wonderful, wonderful. That's a very, very valid point. So till now, what I've taken, the best word is that everybody's waiting to buy opportunity. Nobody's buying a real estate asset. So opportunity is the word for today. Everybody is looking out to buy opportunity. So wonderful. Thank you. Thank you, Rajesh. Now coming to Vikas, who's a dear friend and avid investor. So, Vikas, how do you see, the markets going ahead? Few developers might be coming out with some lucrative proposals. So as an investor, as an avid investor in the market, in the emerging market especially, where would you be inclined towards? So one, under construction project where you can avail certain return benefits, or maybe pay some little premium to buy a finished product. What will be your interest area, Vikas? Over to you.
Thank you, Jess. So yeah, just I would put it this way. I would want to maintain a balanced portfolio. I've been investing in real estate from quite a long time now, and I have seen how the real estate behaves certain times. So I will say I'll maintain a balanced portfolio, as in definitely I will buy out the ready, more premium properties or space, because of the reason the turnaround time is much faster if I want to. Even if I want to keep it for a long term, for a continuous yield on for a year and year ROI of say 12 to 15%, or in some cases 18%, for some period of time, and then maybe rotate it or sell it off. Of course, it should have a appreciation. The property or the space should have a margin of appreciation in capital value as well. So yeah, of course. So in that regard, I would want to buy in a premium ready space, right? But of course, yes, I would also want to enter into the under construction projects as well. Reason, I would want to enter in a certain stage where, as in the value of the project is on a certain level, I buy it out. Of course, having some returns on it till the time it's been constructed and delivered. And maybe after it has been the deliveries are there, I would maybe lease it out, and then sell it out for a certain profit, or maybe I can keep it if I want to. There are a lot of different type of investors in the market, so it totally depends. But I personally would want to be in both the products, the under construction, and of course considering the turnaround for the ready to move in spaces as well.
Perfect. So as per you, it's basically advisable to divide the portfolio into two segments so that your risks also gets mitigated. And in a ready property, if you want liquidity, you can sell it. It's like a hot cake. You can sell it and take out the funds.
Yeah, of course.
Thank you.
This is how I see it.
Yeah. Perfect. So now we know your mantra of making more money with us. Thank you.
I wish so.
Thank you so much. So keeping the above point of risk in mind, I would move towards Mr. Tyagi. So to know your views about safeguarding of our investment in under construction properties. So the most critical balancing factor of a contract between a buyer and a builder has been the timely payments and delivery. So how will you advise to enhance key contractual obligations? As an advisor, what kind of contract should be made going forward by acting fair and reasonable during such times of pandemic? Now when we have seen, because earlier contracts didn't had anything about it. So what do you advise? Over to you, Sunilji.
Thank you, Jas. It's an important question now because most of the projects will be having an impact, huge impact of this situation, which we are into actually. And most of the contracts, every contract actually has a time-based performance. And we all know that time is definitely an essence of any contract.
Yeah.
But the performance of each obligation in a contract are generally subject to force majeure clause we have. And force majeure in an ordinary term, people understand it as a case of war, flood, drought, fire, cyclone, where the performance of the contract becomes impossible, or generally understood as frustration of a contract. So force majeure clause, which we always have in our contract, has certain elements. First of all, it should be some event which is unforeseeable. And second, which could not have been prevented by the parties. Thirdly, there should be direct link between the occurrence of such situation, which makes it the contract performance impossible or delayed. And now in present situation, what we are seeing, the performance has got some impact because of this current situation. We have a pandemic situation coupled with the government orders, and government has prohibited the construction activity, which is now immensely impacting the real estate sector now. Since real estate developer is working in a framework where time is essence, he has got his project registered under RERA with the RERA authority. They have prescribed the time limit for completion of the project. But because of the online going, this current situation, they are in a situation where they can't go ahead with the construction at present. So, as I said, generally the force majeure clause provides for impossibility of the contract. But over here, it is not the impossibility of performance of contract, but suspension of a contract for certain time, or we can say extension of time is required. The contract can still be performed. Developer will still be able to complete the project and deliver it to the buyer, but the performance will get delayed. So over here, question will come about the extension of the timelines. So what we have to now provide in our normal contracts, which we have been doing only about the possibility or impossibility of performance. Going forward, we will see the clauses like pandemic, epidemic situations now, where we will provide for extension of the timelines or suspension of the contract for certain period, not only impossibility. So this will be a way forward. Going forward, what we will see, there will be a change in the force majeure clause, which we have in all the contracts. And importantly, because RERA provides a draft of agreement which can be entered into the buyers, and force majeure clause is also prescribed under that. And it today, presently, it does not mention epidemic and pandemic. So we have to modify our definitions under the prescribed contracts and include these pandemic and epidemic situations also. And RERA should permit, and I'm sure they will permit this kind of modifications, because this is not against the spirit of the Act. This will be in line with the provisions of the Act.
So what you're saying. So quickly coming on to the RERA aspect also, how do you see RERA giving solutions to buyers and developers in such cases of delayed projects, which are not deliberate by the developer, and have emerged due to this pandemic?
Yeah.
So how will RERA give solutions to it by extension of how many months, or how they're gonna manage it?
So Section 7 of the RERA provides for extension of projects in case of force majeure, and the authorities are empowered to give extension. Unfortunately, the provision which is existing in the law presently only provides for extension up to 1 year. And as we've just discussed, there is a situation where it is having a huge impact on the performance by the developers. So authorities are quite aware of this. They have taken up this issue, and various state authorities have provided for extension of timelines which were prescribed in the registration certificates of a developer. Say for Maharashtra, they have extended the period for the projects which were supposed to be complete between 15th March to a certain date. They have extended the timelines by 3 months. Karnataka RERA also has extended the timelines for 3 months for projects who were supposed to be completed by 15th March or thereafter. So they have extended by general order, they have extended the timelines. Tamil Nadu has extended the same by 5 months. UP RERA has said all the projects which were supposed to be complete between 15th March and 31st December 2020, they can apply online for extension of time and they will be granted extension. Similarly, Gujarat has also done the same thing by extending the timeline. And importantly, they have also waived off the fee for extension of time. Otherwise, for extension of time, there is a requirement to pay another extension fee. The authorities have waived those also. And I think last week only, the Minister for Urban Development, he has also announced that they are coming up with huge relief for the developers because they fully understand what the developers are presently going through in this situation, because construction is halted, and whenever this is about to start, I'm sure they will face a lot of trouble in mobilizing everything again. They will have shortage of material, shortage of labor also. So the authorities are fully aware and sure they are taking care of it, and they are coming out with relief measures for the developers.
Surely, because labor will also be a big hassle. Labor is going back to the village. Most of the labor has already gone back, and whatever is here is going back to the villages because of the harvesting, agriculture thing there. And generally, also this is the pattern which we've seen over the last couple of years. So maybe if the labor is coming back after the monsoons, so then 2 months, 3 months, 4 months period will be a less period. That is what I think. Rest, let's see what's going to happen. At least the developers have got 3, 4, 5 months. So that's a good news. So thank you so much for your views on this. So now, moving back to Pankaj. Pankaj, what is your view about this current situation which is going on? As most of your projects are under construction. So how do you see the effect of this pandemic on the future land transactions and its impact on the new launches in such emerging markets where we all operate? Over to you.
Well, I believe that this pause make the market think, give market time to think. It was chasing a particular momentum, which was very much there in this segment. Now, market will get the time to think, and when they think, then they'll realize that ultimately all commercial projects which get launched and sold, they're meant for a specific end purpose. Office spaces are meant for corporates which are going to have occupy them and pay the rental, and similarly retail. So I think developers, the investors, and both the developers are going to be more discerning about the projects they launch. They'll have to make sense, from that perspective. While there was a momentum, people were kind of overlooking such things. So I think it's going to be much more discerning market. People are going to, so it's going to take along very fine. Like I said, fundamentals haven't changed. But idea is to be focusing on fundamentals and not getting swayed by short-term considerations. So we're going to be fine. It's just that more discerning about location, about the eventual desirability of the product for the end user, because that's the only thing which sustains your investment in the long term. So habit of thinking short term and just going with the momentum. So this utilizes pause to be more analytical.
Sure. So your mantra of the location and the A-grade property holds on, and that is advice we also give to all.
This is a hefty investment that you're making, and you have to have a long-term perspective, because you're going to be a winner and you're going to be just fine if you do that. Stick to that.
True.
And don't chase the momentum. Don't, like most investors, if they got the money to invest, one reckons that they're fairly intelligent people. That's how they earn that money. So yeah. So market focused and more discerning, but it's going to be fine.
Wonderful. So you, as an organization, you have opened your office. Otherwise, I can see you, talking.
Yeah, I'm in office since Monday. Yeah.
Okay.
So world is divided into two camps. One is like, oh, what's going to happen? We're never going to go back to the old normal. There's going to be new normal. It's going to take time. 6 quarters, 10 quarters. Things will never be the same again. The second camp talks about a V-shaped recovery. I'm in the second camp. So I think we humans are pretty resilient people.
I know. I was talking to somebody. So, the guy was in so much of habit of attending the Zoom calls every day with the boxer shorts and shirt and tie, that the first day he moved out of the house was in the boxer shorts only, till the time his wife called him back. So let's expect the offices to open soon, and we all resume a normal life. Thank you, Pankaj. Thank you so much. And moving on to Harinder, for his views about. So we've got a very good question from you, Harinder. So what could be the new big change in the real estate development strategy from say about product composition, design features, construction, the sales mantra, and impact of these new improvised developments on the sale price? Will it be at a premium, or we can expect a lower cost from all these? Over to you.
Thanks, Jess. Thanks for asking this. This is one of the ways to thrive out of this situation and come back, with the option of creating a better product at a same value. So there is going to be, its price will always be a value proposition, that what you're giving as a value in the product.
Yeah.
And as I, answered my earlier question, I said there are 4 parts to development process:
Yeah.
government, landowner, banker, and development platform. I think there is a 5th partner which will be created out of this whole situation, which I believe is the need of hour. And that 5th partner is technology. Earlier we were all using technologies as a kind of way to communicate, but I think it will come out as a 5th very strong partner, where technology will have a larger role, starting from our approval. If government can get technology utilization and give us approval instead of 6 to 9 months going to various departments, in a 7 days, where we can do self-declaration, where we can self-file, and we can absolutely ensure that all the norms or processes laid down for us are followed, then technology can play a big role in giving us approval in 7 to 15 days. That could be a game changer from a government perspective. They're utilizing, or we all utilizing technology. Then the second aspect of utilization of technology could be how we design our buildings. If we can do, kind of higher utilization of technology, and we can come out with higher solution on technology, where we can create buildings which are contactless, which are kind of health and hygiene standards, safety standards, controlled with building management, automated, artificial intelligence utilized. Again, it comes back to technology, how well technology will evolve and how well we receive it and how well we start spending on the technology as an industry. So then you get another aspect of technology being very critical in designing the building. Then also while designing, you can do 3D modeling and all the test quickly, design coordination to ensure that what you are creating is functionally effective. And that can reduce your time of construction, that can reduce your time of conflict. You can do budgets more efficiently. And then it comes to marketing and sales. If we can also utilize, technology for virtual tours, to all that we are talking, if that becomes reality, which I believe it should, then we will be able to encourage people sitting across the world buying real estate where they want to buy and take positions, rather than planning their trips and coming back and, thinking. So I think it will create a larger marketplace on platform of technology for people to utilize all their skills and come back maybe with a, kind of magic, and which I believe will happen, that instead of 4 years, we can bring down the development cycle to 2 years. And that 2 years, trust me, can itself reduce the cost of product by maybe 10%. At the same time, deliver a more modern building. So we are all working towards it. And I'm sure over the next few weeks to months or few quarters, we might see a 5th partner emerging out as a very strong solution and a strong stakeholder in the real estate process. So I think PropTech is the need of hour, and that will kind of lead to a lot of saving across the 4 stakeholders, and creating the collaboration for us to get a better product at an optimum value.
Wonderful. So technology, I've always been seeing technology is the last in the list of 10 priorities. Technology is the last for a developer. Most of the developers, I would say. So now, so if what we gather from you is technology will be the king, technology will be the key factor to lower your cost. If you lower your cost by 10% also, like what you're saying, 10, 12%, it's gonna have a huge impact on your development project. Plus the timeline, the interest cost, everything will gonna see a sea change.
Absolutely. So, and we can get more modern, more sustainable, more environment friendly, and maybe more smarter buildings. And that itself, becomes a point of curiosity or a point of happiness for a customer, that he's buying into future, because every investment in real estate is into future. So we got to actually make the investments future worthy now. And I'm sure this will happen across resi, commercial, retail. We're all working towards it, because right now we all need to kind of innovate and come back stronger to create an environment, because real estate, most of these investments are for like 5 decades, 4 decades. These are very long-term plays. So we all have to think through that how our buildings can stand test of all times and all situations which are unprecedented.
True. And if I talk about your previous point about corporates buying their own spaces. So if such model is there, then a developer can do a BTS for them, because then 2 years time is not a long time. Today corporates, they are not investing maybe with the developers, thinking that it's going to take a lot of time due to the government guidelines, due to approvals, licensing and stuff and all. It generally takes 4 or 5 years. So if all this is there on a technology platform where everybody knows the end timeline, this will impact a lot on the corporates also investing in the real estate industry for their own use.
Brilliant point, Jas. I think you've really said it very well. It's a great reminder to all the listeners and all of us actually, that if we can get the end of the day, real estate is a very heavy on cost product. If we actually know the user and if we can design around the user need, that's the best way you can create the right sustainable product. So if corporates can come forward and get into BTS, I think they can get what they really want. Instead of sometimes they take a building 1 lakh square feet, they can actually end up getting in 1 lakh square feet. If they were earlier able to absorb 1,000 people, if they do BTS, maybe in 1 lakh square feet, they can provide for 1,250 people, which is 25% saving. True. And they will get good cost. Plus they will be over a, if they pay over a time, there could be very good cost benefit financial analysis. And also in the process, we can still take care of de-densification, like a flow plate. Just to give you out of the thoughts you're talking, if we have a flow plate now where, open terraces are part of the design. I mean, not only that the building has open assembly areas, but every floor after a certain interval within the flow plate, we have cutouts where people can go out and stand out in an open air environment. Now that could be a game changer from health and hygiene and that fear psychosis which is going around. So I think the way to think will change if we can build around the need and requirement. So I think BTS is a great opportunity for all the people. And otherwise also, I think we got to really do a good analysis and create buildings around the requirement, not a requirement just being fitted into the building which is already created.
Sure, that's a wonderful perspective. In fact, Ananda, you got on the table. Thank you so much. So on this, coming back to Mr. Tyagi, that, considering that there might be a little tough time ahead for real estate industry, how do you see the role of state or center government towards supporting the real estate sector by offering any kind of taxation benefits? Would it be like, a stamp duty reduction, GST reduction? So what are your views about it? Over to you.
So before I come to GST and stamp duty, as far as financial sector is concerned, government has already done, RBI has already come out with 3 months moratorium, and hopefully they'll come out with another extension of 3 months. So that should also give besides these two things, they should give a major relief to the developers, and this will give relief to home buyers also. This is for both of them. Coming to the GST point, I think if REDI or NAREDCO or other association should already be making presentations, or not. If not already made, they should make representations where they must seek suspension of payment of GST for 6 months. And I think government is contemplating it also already. If that can be suspended for 2 quarters or 3 quarters, this will give a lot of relief to buyers and developers both. And if I come to payment of stamp duty, the present situation today demands that government should give a boost to the economy. And to give the boost to the economy, government needs to spend more amount of money. And to spend more amount of money, government needs to increase more revenue. At this situation, generally, the thought that comes to everybody's mind is that, okay, increase the taxes or the duties, stamp duty. The government will have more revenue to incur to give the boost. But there's another thought, which I subscribe to. In such a situation, if you can reduce the rate of taxes and duties, you can increase the base of the payers, and that can give a huge revenue to the government. And if it gives a huge revenue to the government, we are able to achieve more revenue for the government, which gives boost to the economy. Look at the situation today. We know the buyers, home buyers, when they have to pay their last installment, taking possession and getting the sale deed, they've already exhausted their huge amount of investment, and they are not left with much money. And they have generally not kept the budget for the stamp duty. So at that point of time, the payment to the developer as well as the payment to the government gets stuck, and they are not taking the possession because they don't want to execute the sale deed because of generally the stamp duty is 7%. If you reduce that stamp duty rate, there will be a lot of buyers who's they haven't executed their sale deed, paid the stamp duty, they will immediately come forward. Give a window for 6 months, or let's say for the financial year ending on 31st March, there'll be huge number of buyers who will come forward and have the sale deeds executed immediately. This will give a revenue to the government. Indirectly, if you see, this can also give a huge sales opportunity for unsold completed inventory lying with lots of developers. Over there, those flats can be sold, because I know today if I buy this flat, I get my sale deed executed, I'll get a huge discount or exemption. If that is there, this will give a benefit to the buyer as well as to the developer, and indirectly the revenue goes to the government also. So in this view, my thought would be that we must look at reducing the stamp duty immediately. This gives relief to the home buyer, this gives relief to the developer, and this gives more revenue to the government. Government should explore this, definitely.
Oh, wonderful. I think this is a very good point which you got on the table. So it is not only, I mean, just to add to it, residential, yes, of course, there's a lot of such registration which is pending and nobody knows when it's going to happen. But on the commercial and the retail side also, there are so many complexes which are ready where occupation certificate has come, but still almost 80%, 70%, 90% of the project, the registries, the conveyance deed are not yet done. So if some kind of a waiver is there, maybe for 6 months, it should not be like a mass waiver, but it should, if it is coming for 6 months, I'm sure the government treasury during this time will go many-fold. It will bring a mass revolution to collection of stamp duty towards the government treasury. So that's a very, very valid point which you got on table. Thank you so much, Mr. Tyagi, on this, on the very good perspective. So now moving on to Rajesh. Rajesh, just last 2-3 questions now because we're running against time. So Rajesh, just one very, very valid point which I, always debate with my own self. So just asking you, do you think this COVID-19 once again has highlighted the volatility of the capital market, and it's high time people should balance out their portfolio and focus more on a secured asset class like real estate? I mean, getting a cue from what has happened in the last 45, 60 days in the stock markets, or even yesterday, I couldn't see the markets since morning, but yesterday there was a fall of almost about 2,000 points, eroding, people's wealth by about 5.15 lakh crore just in a single day. I mean, so what is your view about it? Over to you, please.
I'm sure that no one can predict capital markets, but whether it is volatile liquidity market or lack of confidence in lower than AAA debt paper or rising gold prices, my assessment is that this volatility is here to stay for some time. Let's agree that capital finds the best returns, like water finds its own level. And we also know that savvy investors always diversify into different asset classes, and to a large extent, investments are driven by liquidity as well as sentiments. So there is also an element of fear and greed that drives investment decisions, particularly in the equity markets, and that is how you're seeing a lot of fluctuations happening at this time. And given many other reasons where there are 15, 20 stocks driving the Sensex that makes the mood, but there are two different things. One is financial health of the corporates versus the stock market, but that's not my statement, but that is how I read it. I think I see today an element of fear in the capital markets, and it is for the first time in my entire working life that I'm seeing an impact on all the asset classes at the same time, simultaneously, with an exception of gold, I would say. So also there are two additional factors that add a very different dimension to the investment thesis or philosophy at this time. And one is the survival of businesses, and second point that is linked to the survival of businesses, and that is employment. And both these impact investments and returns from commercial real estate. And not all real estate can be classified as absolutely safe, that guarantees returns all the times, and we know that. If need for offices is going to go down due to work from home, then there is need for e-commerce that is going to go up. If demand from e-commerce companies is going to go up, then they will need more storage. They will need more space for offices, but that would not mean that they're going to shift their offices into their warehouses. That's not going to happen. So there could be newer companies in that space. Healthcare is going to be another sector. Health insurance has grown by 40% over the last 1.5 months. And I know that what was sold over the first 11 months of last year, equivalent to that was sold in the last 1.5 months. So I'm sure that wealth managers will have their views, but those looking for consistent rental returns will have fewer options, and capital will chase quality rented assets. And in my opinion, investors will certainly look for quality assets that provide consistent and regular returns.
Wonderful. Thank you so much. So quality asset is the key, is the need of the hour. Thank you. Thank you, Rajesh, for your views, for your wonderful views. Now, coming back to Vikas. So Vikas, as you're yourself, into the manufacturing sector, and you're well versed with the European and the Chinese markets, what do you think will happen going forward? Wherein Japan or other countries are wanting to move their businesses out of China. I mean, do you think India will gain out of this movement?
Just I think this given the circumstances right now, because of the COVID-19 pandemic, the sentiments of I would say the global giants, somehow we will not get into the details why, but are against working in China, or maybe getting their work outsourced from China. I mean, like Japan has already taken a call of setting up their own manufacturing industry, and of course countries like Europe and America are also in line. But I would say there is a big opportunity here for India, considering the population and the cheap labor that we have in comparison to some other countries. After China, I think India and places like India and Bangladesh are the places where we have cheap labor. But a lot will depend on how the government supports the whole system in this. I mean, there has to be a very strategic call to this from government's perspective, in terms of creating some kind of policies, because unlike China, let's face the realities, the whole structure, the government structure is very different. We have a democratic system over here. There it is, we know how China works. It's a communist government. But the good thing about them has been, because I have been traveling to China for my businesses and all, somehow or the other, the government is always at the back end of setting up anything. I have seen a lot of projects where, as in it's somehow connected to the government in terms of creating the infrastructure and owning the businesses as well. We don't have that kind of system in India. Here everybody, every corporate, every business owner who is doing their own business is his own support system. If you're getting my point. So it will totally depend on the kind of policies of creating automations. That would be a huge factor if we are talking about moving manufacturing from China to India. The automation, because we would require that kind of quality setups in India, and we totally have the capacity. I was also part of I have actually manufactured for some aerospace companies as well. Just I had a manufacturing setup for aerospace, and we were AS9100D certified company. So I totally believe that we have the capacity and the mindset of creating infrastructure like this, but it has to come from good policies, very intelligent calls from government as well, I would say.
Sure.
Yeah.
So for India to take that opportunity, the government needs to intervene and be a part of it.
Definitely.
So Vikas, thank you so much for your views. Coming on to the last question with Yash. So Yash, as being told by the top honchos of the industry, preservance of cash is need of hour. One should conserve cash towards unforeseen circumstances. But don't you think over-preservance of cash might impact the acceleration of Indian economy in a negative way? I mean, we just want to know your views about it. Over to you, Yash. Yash, you're on mute.
Sorry, there I am. Sorry. Yeah, you're right, Jas. I think it's a great question. As Rajesh was saying earlier, when there is uncertainty, people become cautious. When they're cautious, they obviously spend less and they like to conserve cash. of course, now you have to conserve cash if survival is what you are worried about. But if you have enough money for, let's say, the next 12, 18, 24 months, whatever your risk appetite is, the question would be, should you conserve cash beyond that or not? And my view is no, you should not. You're right. If everyone does it, then the whole economy collapses, and that's why the governments are giving stimuli. But the point is, what an intelligent businessman should think about is that, has the demand gone away, or has the demand been deferred? Often people call it demand deferred versus demand destroyed. If someone has a demand, for example, we are looking at a large project in Mumbai, which is to bring, for rent apartments to the middle of Mumbai. Now, in a current situation like this, we think rental apartments will only go higher. The demand will only go higher, and it's a development project which will only come on stream 2-3 years later. If you have the cash, this would be the right time to invest in a project like that, to build it out, and such that when the economy comes back 2-3 years later and the demand comes back, you will be the first person to take advantage of that, because you have a ready product, it is built to the right specification, it is to react to the current market, and you will be prepared where other people were not investing out of fear, and they will not be prepared to take advantage of that. So as Warren Buffett, very famously says, and I will close with that, is when people are greedy, be fearful, but when everyone is being fearful, be greedy. So I think this is the time to think about that.
Wonderful. That's a wonderful aspect from your side. So everybody should be looking forward to it. Thank you so much, Yash.
I hope so.
Yeah, thank you so much. So with this, I'll be finishing the question and answers round. Thanks to all the wonderful panelists for such an insightful session for us and the audience. I would like to call my co-host to pick up some questions from our audience. Over to you. Yeah, Karan.
Thank you, Jas. Well, we have few very interesting questions from the audience. I'll quickly shortlist few of them. The first one is for Mr. Pankaj.
Yeah.
As emerging markets are seeing a lot of high street complexes coming up by various developers, how do you see this gap getting filled up, especially for retail leasing in such complexes with limited tenants?
Very interesting question. Very valid question. So, like I say, I'll give you an example. About 15 years ago, when I was working for another organization, so we had started a new vertical for setting up business centers. So there was this international property consultant, Cushman Wakefield, and so we had to visit Pune to find a good space for a business center. And the report they came along was, they accompanied me to Pune to identify this space for setting up a business center. And this information sheet they gave me said there's millions of square feet of space available, And I felt, wow, I'll be the king when I reach there, and all the developers will be at my beck and my call, and I'll get to choose from a lot of options, and I'll call the shots. But I went there, I ended up pleading with the developer, punchy developers. I ended up pleading with them to give me their space, and on the contrary, they did an interview of me. How good is your company that we should give you the space? So what I learned was that the supply on paper and the supply which one counts in the market, it doesn't matter. Ultimately, the supply which matters is the supply which makes sense to the end user. So yes, there is a momentum in this particular segment of high street. There are not a lot of new launches, and not all will succeed. Some of them are very clearly very futuristic. They don't make sense now. But as the market was chasing the momentum, people were opting for such projects also, and in fact paying tomorrow's prices for tomorrow's locations. Tomorrow's location has a longer gestation period. You should get into it only if you get a price advantage. But people were paying tomorrow's prices for tomorrow's locations. So it's true that high street segment of the industrial market is oversupplied. There's no doubt of it. And that's more reason why you should be more discerning. Think from the point of view of the retailer when you're making that investment. Which is the complex where the retailer is going to make money? And if you let that guide your investment is also going to make money. So yes, no doubt, there's oversupply. Lot of locations which are futuristic are also ticking along because there is a momentum. But time to think and recalibrate your investment strategy. Go for makes fundamental sense.
Wonderful, Pankaj. So you mean to say that there is a difference between the actual supply and the virtual supply, where the quality, the location, and various other aspects will come into the picture.
Absolutely. The supply which matters is the supply which is going to attract the end user, which is the retailers, is going to be limited. And there is a lot of supply which is proposed projects and projects which may get delivered, but they may not get operational for a long time. That is going to be the situation. Because, like I said, that's why any industry is cyclical. When the going is good, it does get oversupplied. Any industry. An oversupply, then it causes pain. So investors have to be very careful of the situation. Don't, like I said, don't get guided by short-term gratifications. Just think from the end user's perspective. If it's office space, think from not from considerations or offerings which are being made to you to take that decision, but think from the retailer's perspective and the office occupier's perspective. Study the benchmarks around to discover the right price. And if you do this fundamental due diligence, you'll be fine. So don't let the oversupply and this equation worry you. Just focus on the right things and you'll be fine. You have to pick that one thing for your investment. You don't have to pick them all. So pick the right one. So yes, there is oversupply. I won't be like saying the truth if I say no. There's not oversupply. But in every momentum, every upswing is accompanied by excess supply. So that's
wonderful, sir. Thank you so much. Well, I'll quickly jump on to the next question. This one is for Mr. Tyagi. In the secondary market, a lot of transactions are under contractual obligations, which are yet to be fulfilled. Our viewers would like to know what remedies are available in the court of law if either party does not honor their commitment and forces the specific performance clause in the ATS. Over to you, sir.
So as we discussed in first question, every contract has a force majeure clause. And even if it is not there, in that case, there is a section 51 of the Indian Contract Act, which comes into play, which talks about the doctrine of frustration. So wherever the contract cannot be performed, as I had mentioned in earlier question also, in the agreement to sales, which may have been impacted by the current situation. So as I said in the first question also, the time to perform these agreement to sell will automatically get extended if the parties have mutual consent. They can extend the timeline. If there is no consent, parties are looking for excuse on the ground that this is a force majeure event. We have to carefully examine each case and effects of that case. In this case scenario, present scenario, there's no frustration of contract, as I said earlier also, because contract can still be performed. Let's say the timeline for executing the sale deed was supposed to be by 30th April, and which has passed, but the lockdown was going on. In lockdown, the parties couldn't come out, couldn't execute the sale deed, or if they had to take a loan, they couldn't do that. So the timeline will get automatically extended till the time the lockdown continues. The question would be, after the lockdown opens, the timeline will be extended by the timeline for which the lockdown was existing, or only for a certain days, 7 days or 15 days to complete the formalities to perform their contract. Now, in this situation, there could be a possibility where a buyer looks for excusing himself from this contract. In that case, what will be important would be the forfeiture clause, if there is, in the agreement to sell. If there is a forfeiture clause, that buyer is trying to excuse himself, not performing contract, seller can always forfeit his earnest money. However, if the seller is trying to take an excuse of this situation and not willing to go ahead with the execution of sale deed, in that case, there are generally clauses in the agreement for specific performance, and buyer can seek specific performance through the court of law, and he can get his sale deed executed by going to the court. If he can show that he was always willing to pay the money, he had the money to pay to the seller, but the seller was trying to take an excuse out of the contract. So in conclusion, the present situation does not mean termination of existing agreement to sales. The timeline only to execute and perform and complete those contracts will get extended in this scenario.
You mean to say that, the buyers cannot use this as a tool to renegotiate the prices which were earlier closed or...
I'm sure buyer will definitely look at this opportunity, but I don't think legally they can do that.
Okay. Okay. Thank you, sir. Point noted. Very well said. Just over to you. I would want you to answer this question because a lot of consultants have been asking us this. So when do you see the transactions in the market to start rolling?
Thanks for the question. It's a nice one.
Yeah.
The audience and the consultant. So, what I believe is that the current market is full of opportunities, like what Yash said, like what Arinder is saying, like what everybody's talking, that it is full of opportunities. We need to go and find one. One needs to have a close connect with the market to understand the trend, which might be changing on maybe a weekly or a fortnightly or a monthly basis, depending on the overall situation in other industries. I would say, the asset class of real estate being the safest and the easiest to sell can generate liquidity for maybe a manufacturer, for an exporter who is or might be under stress and require some funds. So we just have to touch base with certain people who are looking for us, who are looking for the consultants in the market to have a deal done. Moreover, my other perspective also says that, money saved during this year now and going forward, due to no travel, due to, less expenditure on luxury cars and luxury items, reduction in the lavish weddings, etc., would be some amount would also be diverted into investing in, a category of a pre-lease asset for generation of safer incomes. So just to ask, any guesses on the spent on marriages or travel in a particular year within India? I mean, so I'll just say, it's almost about 1 lakh crore in weddings annually in India, and about 6 to 6.5 lakh crore in travel, both domestic and international.
Wow.
So if I club that, it's almost about 7.5 to 8 lakh crores, which will get reduced. I'm saying if only 10% of that comes back into real estate, because people are not traveling, people are not spending, people are not doing marriages, luxury items will take a hit for some time. So that money will be saved. We are saying that, okay, that money will not be generated, but if we take a cut of 50%, we come to a figure of 2.5 lakh, 3 lakh crore. We say on that, if only 20% or 10% of the overall amount comes into real estate, which is close to almost about 40 to 60,000 crores. So that is what we are looking at. So real estate is the safest class. It's not going to close. And, just to tell our audience here, as an organization, we are transacting. We have closed certain transactions in the last 20 days in lockdown. So I would just sum it up saying that there is opportunity still in the market. I've got through this webinar, we've been, Pankaj and me are talking, Yash and me are talking. And after about, 10-15 minutes of discussion, we are immediately jumping on to closing a transaction, which is an opportunity for us. So I would say, opportunities are there, will be there, and always they are there. We just need to go ahead and catch hold of them. That's it. Thank you so much.
So 7 lakh crores, it's almost 5% of the GDP.
Yep.
So great insight, Just. I hope the statement is very loud and clear to, and they have been received by our associates and channel partners. And I think that we all should jointly revive our sector with closures of transactions and with very positive thoughts. Very well said. Back to you for the webinar's summary.
I'll just take another, one more thing I would love to say. I'm a firm believer of, change the way you think and it will change your destiny. So we just need to change our thinking. We have to be positive. It's the way we think. If we change the way we think, we're going to change our destiny and people around us.
Thoughts become reality. Right.
Yeah.
True.
I think all of us are in an age group where we have, kids coming up for marriage. So you gave me some bunch of properties by saving today. The way I look at their marriages now. So I'm happy to say that.
I know. So it will be a personal loss for me because my destination wedding will not happen. But then I'll give you a real estate on that.
That was a great perspective, Just. I loved it actually. And
Thank
I
you.
loved all the panelists, the way they have guided us today. I mean, I've really learned a lot out of this.
Thank you. Thanks. Yeah, Karan, over to you.
Over to you, Jess, for the webinar summary, please.
Okay, sure. So thank you everybody. Just to summarize in about 2 minutes on the various aspects which I've noted down. So Pankaj mentioned that A-grade properties and A-grade location is the key. As investment, if anybody is saying if there is a oversupply also, which we say it is, but then properties which are where the tenants will be going in retail, in office, the locations which are good, and the past history of the developer, which is good, will play a key role. So that's a take from Pankaj. Harinder came out with different perspectives wherein, employees, and that's a very good perspective, that employees of growing sectors like e-commerce, pharma, can be the potential buyers for immediate sale of developers' inventory. Developer today is also ready to give a bulk deal if somebody wants to. So that's a very good perspective coming out from you, Harinder. Rajesh, Vikas, as the high net worth individuals, HNIs, have a view that commercial office space in emerging markets will be of prime interest to investors. Not right now, or maybe right now, depends on the opportunity. But one needs to balance their portfolio in different asset class and get desired, and low risk returns, which is very, very important. You have to, hedge your risk. The Vikas had another point wherein, as per him, the government should get better reforms to attract manufacturing companies to enter India. At least the products to be consumed in India should be made in India. That's a very, very valid point, Vikas. Yash mentioned that, the rotation of funds in the economy should not stop at any level. And the best pick for today, what I see is rather than the real estate buying, it's about the opportunity buying. So that's a good take from you, Yash, for us. And Mr. Tyagi, he's been, helping us with us for last so many years, suggested that, government to come forward to support the industry, as it is the second largest employer to the country after agriculture. And, it's a contributor to about 6%, 6.5% in the GDP of the country. So if we open up, if we come down with lesser stamp duty, we're going to see a mass revolution coming up where, so many conveyance deeds from the developers, builders, which has not been done, will be done. So that's a brilliant perspective coming out from you. And that's it from my side. Discussion with all the panelists, all of you in the last couple of days has been very, very knowledgeable personally for me, and very, 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 very encouraging, in fact. Looking forward to having another great session with all of you very, very soon. Thank you so much. Thanks a ton.
Thanks so much, Jess.
Thank you.
Thank you.
Thank you,
everyone.
guys.
All
Thank
right.
you all the participants.
Thank you very much.
Thank you.
Bye-bye. Take care.
Thanks.
Thank you so much. Thank you. Thank you.